What's up guys, this is Nick with Nick Does DGI, and welcome to my channel where I cover all things personal finance, stocks, and real estate. In this video, I'll be going over how my M1 finance portfolio has performed this past week, as well as some dividend announcements and Disney news. So let's get into it. We received several dividend increases since the last M1 Finance portfolio update, a positive indication that the market has improved its outlook on the economy as we close out 2020. With the vaccine now in distribution and the first shots being administered this week, I'm confident that more and more companies will be resuming share buybacks, dividend payments, and increasing dividends as we head into the new year. First up, we have ticker symbol MAA, Mid-America Apartment Communities, increasing its dividend by 2.5% to $1.03 a share quarterly, or $4.10 annually per share. Second, we have ticker symbol O, Realty Income, increasing its dividends by 0.2% to 23 cents a share monthly, or $2.81 annually. Third, we have ticker symbol WPC, WP Carry, increasing its dividend by also 0.2% to $1.05 a share quarterly, or $4.18 annually per share. Lastly, we have ticker symbol PFE, Pfizer, increasing its dividends by 2.6% to 39 cents a share quarterly, or $1.56 annually per share. And as we hop on over to the portfolio tracker, I have already highlighted in yellow to notate the new annual dividend income of the four companies just mentioned. And as of this recording, my projected annual dividend income is $176.26. This figure is forward-looking, so it will continue to rise as I continue to invest into this portfolio. And although these dividend raises aren't particularly high, even for the three REITs that we are paid out from, considering the circumstances of this year, I can't really complain. And we are now back on the M1 Finance platform. I will post the referral link in the show notes below. But as you can see, the Nick Does DJI portfolio is officially above $6,000. I've been busy with a couple of buys this past week as we hop on over to the activities tab and filter out my trading deposits. You can see that within the past week, I deposited, $300 here, $50 here, $40 here. And then as far as the trading goes, we made a couple of trades this past week. I think most notably on December 8th, I put in about 151 into 19 different companies. It ranged from over $50 to WPC Carry. I think I mentioned last week that I was planning to rebalance this, so I upped the target allocation for WPC from 3% to 4%. So that's why a good chunk of the $151 went into WPC. I'm not going to go into every single one because that might take some time, but you can just see my portfolio actually in the show notes below. Also, 2 days later on December 10th, I put in the $300 and it went into 27 different companies. So like I said, you can visit my portfolio and see the percentage weightings in the show notes. And then a couple days later, on December 11th, I just bought 3 more different companies because I think that they were undervalued. And then lastly, I had a couple of dividends payments left over in my account, which amounted to about $5.50. So I just put that into Northrop Grumman. I think right now, especially with the upcoming administration and just the last couple of months, the defense sector stocks have actually been taking a huge beating. So I think there's the value to be had there. And As we head over to the performance tab, yesterday was actually a really great day. The market is up on the news of a potential stimulus package by the end of the year, but as of this recording, they're still in negotiations, so we'll have to see how that pans out. So the one-day performance, we are up actually at 1.15%, or $70.35 in the past week. We're up by 0.31%, or $18.74. The past month, we're up by 2.7% and $149. And then the all category, we are up by 11.76%, or $435.34. And now also keep in mind all the gains and returns are money weighted. So these figures include not only the market, capital gains on your shares or the appreciation on your shares, but also the dividends that you have received. So since this portfolio was started on September 3rd or 23rd, I have earned a total of $29.19. And then my shares have appreciated $406.15. Next up, I believe it's finally time to talk about Disney. I have a confession to make. Believe it or not, I am a huge Disney fan. I have been a Disney annual pass holder for the past 2 years, and I watch everything from Marvel, Pixar, Star Wars, and the Walt Disney Studio animations. This picture is from 2018, when my wife and I became annual pass holders for the first time. Until the pandemic, we would go to the parks at least twice a month, from rope drop at park opening at 8 a.m. until the fireworks at 9:30 p.m. But as the California theme parks have been forced to shut down since mid-March, the closures have materially impacted the company's bottom line. In its latest earnings report, the parks, the experiences and products division revenues are down 61% year over year, from $6.65 billion down to $2.58 billion. And this pandemic has also impacted the studio entertainment almost as equally. With movie theaters practically shut down, this division has seen year-over-year revenue declines of 52%, from $3.31 billion to $1.59 billion. But one positive catalyst going for Disney right now is its Disney Plus streaming service, which launched in 2019. And last Thursday, on December 10th, it held a Investor Day event where the company certainly made headlines. Due to the stay-at-home nature of the pandemic, Disney announced a total of 86.8 million Disney Plus subscribers, a figure it had forecasted to reach by 2024. So basically, they reached their target 4 years early. In addition, Disney announced that it had reached 38.8 million Hulu subscribers, 11.5 million ESPN subscribers. In all, the company announced 10 Marvel series, 10 Star Wars series, and 30 Disney animation, live-action Pixar series, and films. And at the event, several trailers came out, and I'm very happy with the direction of streaming and wholeheartedly agree that Disney Plus has the potential to overtake Netflix within the next 3 to 5 years. And as people say in the streaming wars, content is king. Disney expects to spend $8 to $9 billion to Disney Plus content in order to compete with Netflix, as well as up-and-coming streaming services from WB's HBO Max and Universal's Peacock. So how did the market react to the Investors Day event? Quite well, actually. On Friday, the stock popped more than 13% to close around $175, pushing the market cap to over $318. And as of this recording on Wednesday morning, December 16th, the stock is in the pre-market trading around $174, $175. And right now, I just believe that the stock is richly valued for me, as I honestly did not expect this recent pop in the stock price, considering the parks and the studio segments are still severely impaired. But I 100% believe this is a forever buy and hold stock in my portfolio, and I hope to accumulate enough shares where I can pass these shares on to my future kids. I just hope that when things are back to normal and the parks and movie theaters can reopen, then the company will also be able to resume paying its dividend. But I think that will conclude this week's update. With the holidays coming up next week, please stay safe and healthy. If you enjoyed the content, please consider smashing the like button, subscribing to the channel, and clicking on the bell notification to receive all the latest video alerts. Have a good one. Bye.